Hello and welcome to Weekend Investing Daily Bytes. This is a show that we record on every weekday and talk about one interesting subject for enhancement of learning and knowledge amongst our users and followers of our channel. Today we are going to talk about a plan for successful trading. This is good for new traders and even those traders who are struggling with their trading. They may find some pointers that can help improve their trading. So first, let's take a look at the markets as is the format of this video. Markets were reasonably, I would say, flat, bobbing up and down 50 points from yesterday's close. Most sectors were flat: real estate, metals, IT, autos, infra, consumption, commodities. Only energy sector was a bit positive, and PSU banks and private banks were a bit negative along with pharma. So the sort of negative wave that started a few days back, and we had a remarkable bounce day as well, does seem to be not continuing at this stage. The news from the war front is continuously, going left and right like a pendulum. Every hour there is a news item of the troops are getting pulled back, or it gets refuted an hour later. So the price of gold and price of crude is actually not receding. That kind of suggests that for now the tension is on. And hence we are seeing some sort of hesitation in the market to pick up from where we are. On a weekly and monthly basis, the markets have had a decent correction. Even on a 3-monthly basis, most of the sectors are down quite in the red. Actually, if you just take a step back, you will see most of the 1 week, 1 month and 3-month calculations are red, although financial year is solidly green. In terms of the internals of the market, Nifty Next 50 was up 0.2%, but small caps and mid caps gave up 0.75% and 0.44%. Nifty itself was down 0.1%. Within the weekend investing small cases, it was a mixed bag, with NNF 10 gaining 1%, ATH2 gaining 0.6%, EverGreen gaining 0.5%. EverGreen actually is the only small case which has a hedge with gold, and gold has been moving up, so that has provided a good hedge to Mi EverGreen. And you can see here that over 3 months EverGreen is down -1% versus its benchmark index down -4.3%. It trades CNX 200 stocks. So from that perspective, it has done well, with financial year currently at plus 36% versus the benchmark at plus 19%. Other than that, most of the other strategies have lost ground today. MI50, MI20, MI25, MI35, all mostly small and mid cap orientation in those strategies. So let's come to the topic for the day, the plan for successful trading. First of all, we must consider whether we should be trading or not. That itself is a part of the plan that you should have, considering your ability to trade. The ability to trade may mean how tuned you are in terms of following the market at the frequency at which you wish to trade. What is the kind of profession you are in which allows you that time? If you are a full-time trader, of course, that's a different matter. But if you are in some other profession, please know that trading will occupy your mind space at all times. So if you want to do well in your own profession, I would not advise trading for you. But if you are an entrepreneur or running your own business, and you think that you have delegated all your professional tasks and you have free time, then of course you can look for trading. So why and when should one look for trading? My sense is that, and these are all my thoughts, could be right or wrong. I mean, just assimilating what I've been thinking about this for last 25 years in the market. And I used to trade a lot in the first 10, 12 years of my career. And then I reduced trading, and for the last many years I have not been trading. But I do always look out for trading opportunities, and at some point in the next few years, maybe I will start trading again, because I do feel that trading does keep you very up to date, or it keeps you busy with the market. So you know what's the undercurrent in the market when you are trading. Whereas once, if you take a step back and you are looking at the market once a week, it makes you go away from the market, which is also good. I mean, depends upon what is your objective. So this today's topic I am dedicating towards new traders and traders who may want to have some improvement in their trading. So first of all, you need to treat trading like a business. So trading is not like, buying lottery tickets or just speculating mindlessly. If somebody told you to buy this today and you just bought it, and you're waiting now, when to sell, or what trigger will change your mind about that trade. A lot of people trade that way. I think 90% people trade in a very, very ad hoc manner, that salary income is coming from somewhere else, profits are coming from somewhere else, so let's try to trade with 10% of that, 20% of that, but not having any plan. How much you're going to allocate in one trade, how you will enter the trade, how the entry signal will be generated for you, how the exit signal will be generated, what is the risk you will take per trade, what is that point if you reach a drawdown where you will stop trading that strategy, what will you do if trade is going your way, at what point are you going to book profits, is it going to be a percentage based profit returns, or are you going to allow winners to run till the trend, for instance if you're trend trading, trend turns back, so on and so forth. So these are all rules of the game, the sort of SOP of trading. Just like if you were running a business, you will have a SOP. This is how each step has to be done, each procedure has to be done, this is the risk that I'm going to take, this is my cost of capital, this is my own cost of time, and based on those calculations, at the end of the year, you will figure out whether that business is suiting you, whether you want to grow in that business, whether that business is drawing negative energy into you, all those things. So it's a very vast array of things to think about, but a lot of people don't think about it like that. They just feel that just come to the market every day and just throw some trades here or there. Some will stick, some will not stick, and there will be some periods of fantastic gains, and then there will be periods of tremendous losses without any structure around it. So don't do that. Try to create a structure and SOP around your business. Use technology to your advantage. So now, these days, a lot of tools are available where you could automate your strategy. You could use different kinds of orders. For instance, GTT orders are available. Different kinds of basket orders are available. So use the technology that is available to enhance your own trading. Trading, a lot of people think trading has to be high frequency, or it has to be done in 1 minute, 2 minute, 5 minute time frame. You can do trading over an hourly time frame. You can do trading over a daily time frame also. So there can be a different levels of what kind of trading frequency that you have. So you can use technology to a large extent if you are going into very high frequency kind of trading. Protecting your capital is one of the biggest features you should have in your trading. As I've said in many other daily bytes, deep drawdowns are the most difficult to come back from. So try to avoid deep drawdowns, even at the cost of lower returns in your positive years. If you have shallower negative years, you will enjoy your positive years more. and because you will come out of that negativity very, very quickly. So protect your capital and make sure that you have rules for stopping trade in case you lose XYZ within a week, or XYZ within a month, or XYZ within a day. If you have consecutive so many losses, then you will relook or stop at some point. So many rules you can always make it. So again, tied to this is never be shy of learning. A lot of times our strategies may fail. We must have continuous learning. We have to continuously try and improvise and improve our trading. And there is no shame in accepting that you made some losses or your strategy didn't do well for some time. As long as you are learning and moving ahead, you should be all right. Then establishing your methods based on facts, where based on facts would mean that you are thoroughly backtesting your strategy, you are putting real world parameters to test your strategy, slippages, brokerages, reaction time, so on and so forth, and create a hypothesis out of some observed phenomena. Let's say for instance a breakout. You observe breakouts and you can create a strategy out of that, or it's a reversion to mean strategy where you observe some phenomena and you devise a strategy, and not the other way around where you just trying to backtest things, and whatever backtest is giving you a good result, you're saying, okay, let me start doing this. So first observe a phenomena, then you try to create a strategy around it, and that will be the one that you will have really good confidence on. Of course, always use a trading plan. So everything about risk management, about position sizing, entry, exit, how you're going to select the stock or the index, all that has to be there in the trading plan. Risk only what you can afford to lose. So this is something that I also talked about on Twitter today, that my sense is that your trading capital should be only that much that if you lose it all, your life should be able to continue after that, and you should not get into a depression hole after it. Of course, it is going to be very, very difficult to lose it all, what you've allocated, but try to allocate stepwise. So, if you have 100 rupees as your capital or as your net worth instead, try to trade with 10. Once you are sure that you are good at 10, then you go to 20. Once you are sure that you are doing well at 20, then you go to 30. So on and so forth. So don't jump all your capital into the market, because that can be really disastrous if disaster were to strike. Of course, exiting a trade is as important as anything else, but more important actually than entry. So if a trade is running, for instance, and you bought at 10, 20, 30, 40, but if it's going to 50, 100, you could have entered anywhere, you'll still make profit, but you need to exit in profit or exit in loss. Both are very, very important decisions, and both can be right. Exiting in loss can also be a good decision at times, because you could have disastrous loss if you didn't exit early, and exiting in profit also can be a very good decision, because you may lose all of that profit later on. So again, depending upon your strategy, you must know where to exit. Accepting loss is a major part of a trading, even investing game. So most world's best traders don't have a win ratio of more than, let's say, about 40%. So if they do 10 trades, 4 will go right, 6 will go wrong, but they will win a lot of percentage in that 4 wins and lose small trades in those 6 losses. So it's a same as casino math, where you'll have small losses, but one or few very big jackpots. You have to design your strategy this way. There's no point designing a strategy where you'll have 90% success rate or 1% wins, but that one loss will take away 50% of your capital. So no point of designing such silly trading strategies. You must adhere to the idea of positive expectancy when you combine the probability and the expectancy of your strategy. As I said earlier, know when to stop trading. So if trading is not doing well for you, if you're losing capital, if you have tried several times, if you are losing sleep, if you are getting nervous about it. And see, every person is wired differently. Not all of us can trade. Not all of us can become great investors. We are good at something and we have to discover that something. I may be good at slow investing. Somebody may be good at faster investing or faster trading. Somebody may be good at sitting for 10 years on a stock. Somebody may be good at scalping in 10 seconds. So we have to figure out where that glove will fit us. We have to find that glove, and that takes time to find out. It took me decades to find out. So with these notes, I want you to think in depth more about what you're doing, how you're doing it, and possibly improve your trading / investing. Wishing you all the best, and see you in another video. Bye.